Scott, yes, thank you very much, Scott. And Jamie, how you doing, buddy?
Hey everybody, what's happening? Welcome. Happy Thursday.
All right, and yeah, thanks everybody for showing up today. I'm kind of on a different internet and a little different configuration here today, so bear with me, guys. Yeah, I had to come visit my parents last night for kind of an emergency, but don't worry, everything's okay. And but I just wanted to throw that out because I don't have my regular configuration down to one monitor, so I'm juggling a lot of things here, guys. But uh, anyway, yeah, all is good, Wally. Just so to not leave you in suspense, my dad he's older and has pneumonia and was in the hospital, but man, he's one tough guy, man, and got out. He's doing fine, so no worries. All right, guys, let's move forward. Let's get through the disclaimer first, guys. We're going to be talking about some setups here. We're going to be talking about some cool alerts and configurations, and some maybe even something to maybe keep your eye on, you know. But just keep in mind that we are doing this for educational purposes only. Okay, nothing that you see and hear should be taken as advice to purchase any type of instrument. So if that's what you're looking for, you might want to seek out a registered advisor, a stockbroker, somebody who can legally do that in that capacity. So before we move on to the content for the day, we want to go over for the people in here who are checking out us for the first time and talk about our support, education, and training here. Guys, we are always here to help you. We've added more staff. Everybody here is an experienced trader and knows the software very, very well. So we do not leave you hanging when you get the software. Okay, we're here for it to help you. We provide just endless amounts of webinars, education, and support to get you started in the right direction when you're using the software. It's very important to us that we're not just handing you off this very powerful software and just kind of just leaving you out there dangling in the wind. No, we don't do that. We take you by the hand and make sure you know how to use it, and more importantly, to how to use it to benefit in the marketplace and ultimately increasing your profits. We do that with our traders room. First and foremost is Barry Arneson, who works there in the trading rooms as the moderator. Over 500 attendees in there, some really good traders. Guys, you get to watch over Barry's shoulder and see our software while he kind of navigates the marketplace and profits from it. We have webinars every day of the week. Most of them are at the same time slot, this 5 Eastern time slot, Monday through Thursday. Combination of myself, Jamie or Steve Gomez. You can see them there in the on the slide, but we also on Wednesdays we throw Dan Merkin and Brad Williams in the mix, our CEO and CTO. It's a great place for a demonstration and Q&A. Friday support session, and this is for everybody, even if you're not a subscriber. You are welcome to come to our Friday support session to learn more about the product. It's a great place to come and just a Q&A session to ask any questions that you may have about the product. Real quickly on our Brokerage Plus product, if you are really good at writing strategies and you want to automate them, you can do so with our Brokerage Plus. You have to be a premium member. If you want more information on that, just check out trade-ideas.com/beta. We got a nice little video in there for you to watch and see how it works. But that's where you want to go to find out more about Brokerage Plus. One last thing regarding our training, we just started what's called, I shouldn't say it's a month old now, so it's TI University. 6 hours worth of educational content, starting with Trade Ideas 101, basically the beginning, starting from scratch and building up over the process of 4 days, an hour and a half each day. By the time Friday rolls around, guys, you're going to have 6 hours worth of education from our TI University. We are getting incredible response from this. So even if you've been with us for a while, you're welcome to take that, okay? But you do need to enroll in it. So just go to our training section in the footer of any of our web pages, and you will find training. Click on that, and you can enroll in that TI University. All right, let's go over the agenda for today. We're going to go over a market recap. We're going to go over the Holly recap. I think Jamie has some slides to show you regarding the profits, the risk-off profits that Holly has accumulated against the S&P 500 over the last several months. And then I kind of got a treat for you. It's something during earnings season. A lot of people don't realize that earnings season, well, most people do, but some people don't realize that's the best time to be trading, is during earnings season. That's where you get some incredible moves. So I'm going to kind of lay out a game plan for you for earnings season. I'm going to tell you what I used to have to do and what I'm able to do now with this incredible software. It makes it so much more easier. So we'll look at that when we come to it, get more into detail of that. Right now, let's just back out of this. And what we want to do is go over our market recap. And we always start here with the trying to keep a juggling on one monitor. You know how it is with one monitor, Jamie, trying to follow your questions and also display everything is kind of tough to do. So just let me know, Jamie, if I do have a question, don't hesitate to interrupt me and just and I'll get to it. But all right, guys, let's pull up the spiders and see where we're at. And there we go. Well, we're kind of building ourselves into a potential little wedge here on the longer term time frame. Let's just go ahead and draw this right now. And let's take a look at it, pull up our handy dandy trend line, and we're going to put one right here. All right, and we'll just grab this, stretch it out. And we can come right here. It's not as defined on the bottom. We'll do another trend line right here, and there we go. Something like this. You have a little bit of a sloppiness, a little breaks, a little below that right there. But you can kind of see a kind of a wedge developing here. Some of you might want to take it and do more of this right here. Just actually go ahead and put these wicks in there if you like wicks, which in most cases I do, and there's no reason to eliminate the wicks. There was trading going on at that day. That was an anomaly. A lot of times if it's an open, sometimes I will it won't have as much influence for me as if it trades down and it comes up. But nonetheless, you can kind of see there, even with the naked eye, kind of a wedge that we may be building there. And I've been preaching over the last several months. I'm not crazy about this price action to the bullish side. I think there's some serious deterioration going on here. You've heard me talk about the other side of the mountain. It's been a nice, smooth move higher, but now we've come and it's getting really rocky, really wavy, really wicky. This is a kind of action when you do have market tops. And some great earnings today, and yes, decent move in the spiders, but we're still, under our fast line, we call it, our 10-period moving average, still under our 50. We did hold the 200-day once again. So if there's any consolation here, I think for the bulls is we keep holding this 200-day moving average, and really that's kind of a weak word to use, consolation. Because that is kind of resiliency there. We have held this 200-day for some time now in the overall price action, and at some point, yeah, the bears may get a little frustrated. Hey, we tried knocking on the door, Jamie, now for several times on this 200. So time will tell, but all in all, we're still kind of right in the middle of our range. A lot of chop. I'm still not liking, what I'm seeing here. A lot of bulls will tell you, nothing's changed. We're just resting. We're consolidating for our next move higher, but it's sure taking a while. So, yeah, the jury still, by all means, is still out. For me, as far as
it could play out like the Bitcoin chart.
Mm-hmm.
Kind of been a leading indicator. Now, will it continue to be a leading indicator? Who knows? But it certainly is interesting.
You're exactly right, and thank you for bringing that to my attention. And probably what I'll do next week is it wasn't on the agenda today, but maybe I'll bring the Bitcoin chart back up, and we'll take at it. Look once again. What's Jamie referring to? About 3 weeks ago, I pulled up the Bitcoin chart, and boy, the similarities were very uncanny. How this looked compared to the side of the mountain in the Bitcoin. And once again, I just want to show you that this type of action is typical of, tops. We will see. All right, so real quick, let's go over the Qs. I'm sure they performed a little bit better today with Facebook, but not really. I mean, you still, below the 10-period moving average, still below the 50, but they haven't even touched their 200 yet. So some relative strength there, definitely in the Qs. IWM. It was showing some relative strength, but nothing great about today at all. Diamonds, the last one we'll take a look at before we move on. And pretty much the same picture, guys. We're seeing the same picture, and you can kind of see the wedge there even more pronounced. All right, guys. So let's do this. Jamie, do you have anything that bits of wisdom you'd like to add to this?
Oh, it's been kind of funny in the sense that, of course, the up days are the lower volume days, just like we had today. And when we do have the down moves, the volume levels are higher. Now, does that mean anything? Maybe.
Yeah.
But we've all got front row seats, so charts are not the end all be all, but they're the only guides that we have, potential guides. So, I hate to keep bringing up the Bitcoin example, but, very rare. I can't even remember a time where I've seen two of these, or, what we could call parabolic up moves start to correct, right? In such close proximity that are such widely followed things. Of course, Bitcoin being the newcomer to the block, but still, the eyes of the globe are upon it, right? So it's going to be interesting. The bottom line, the good part is there should be some good volatility, right? And as traders, that's what we need. So, should be good, but choppy waters indeed.
Sure, it is. Definitely that. Definitely that. All right, guys. So real quick, I'm going to turn it over to Jamie. I didn't. I didn't go over. I've been kind of busy and actually put my segment together pretty quick tonight. So I'm gonna let Jamie talk about the AI today. I will say this: the last few days have been incredible going into this day. So she, as like I told Jamie earlier in a message, yeah, she definitely deserves a rest today. Not a bad day, 42 cents on risk on, 22 cents on risk off, but nothing to write home about. But I'm sure Jamie, I did see a couple of decent trades in there, and Jamie, I'm sure we'll go over them. But so feel free, Jamie, to take over whenever you're ready.
Yeah, let me grab that baton. Hold on 1 second. Okay, you should have eyes on my desktop here.
I got it.
Okay, good. Okay, so let's take a look. What I did is I took the liberty of making a slide here so everybody could see. This is Holly's performance against the S&P 500 tracking ETF, otherwise known as the SPY, down here in blue. And then, of course, Holly's performance in the more conservative risk-off mode. All right. And I just wanted to point out, yeah, today was just kind of treading water day. It's kind of like when a stock, continues to go and go and go. A little sideways action, a little flagging action, as our friend and colleague Steve Gomez likes to say. The troops need a night's rest and a hot meal and maybe even a shower before they trudge on. So, of course, that's exactly what we're seeing here in Holly. But just kind of wanted to point out the last, let's see, here's today. Let's see, 1, 2, 3, 4, 5, 6. For the past 7 trading days, that's the little square in yellow there. I mean, these risk off and risk on numbers have just been pretty fucking phenomenal. Oops, pardon me, ladies and gentlemen. Bleep, bleep, bleep. That just slid out. I apologize.
I totally missed it. I was answering David here.
I sincerely apologize. I don't think I really offended anybody out there. we in the trading in the game for 20 years, we tend to let some little curse words slip out, but typically not when I'm addressing a group. So if I did offend anybody, I apologize. As you can see, I'm a little bit passionate about this. We get excited, so hopefully no harm, no foul there. Okay, so moving right along here, she has been on a phenomenal run. And, you know, that's a good thing because a lot of this action in here was on the short side, right? And, you know, when the market has been going up in this trend right here, short strategies would show up, but we didn't really get a lot of action. And even in this downturn, it wasn't just crushing it. But now that it's had time to adjust, we're starting to see a nice little mix of shorts and longs. And pardon me, I just noticed the flurry in the questions panel there. I'm sure they're all nice comments. We're a friendly crew around here. But anyway, let's talk about what Holly did today. So if we look over here, as Andy said earlier, nothing to write home about, whether it's risk on, 42 cents on the grand tally if you're holding everything, or 22 cents on risk off, which is Holly simply obeying her rule set like me, you, or any other trader would do. So let's pull up the blotter here. But first, let's just take a look at the strategy complement. She did show up with 10 strategies in the hopper today. Not the most, not the least, kind of about right in the middle. 7 of those are longs and the other 3 were shorts. And of course, just because they show up doesn't mean they're going to get any play time. So these guys sat on the bench today. So we only had 5 strategies of the 10 execute any signals today. And of course, we can sort by count here or use any of these columns to sort by any of these metrics that we want to quickly reference. Now, let's take a look at the trade blotter. So when did Holly first get active today? Here we can see 7:01 Pacific Standard Time, which is Pacific Coast time. Market opens at the nice hour of 6:30. So we get a nice early rise here on the West Coast. So 31 minutes into the market, followed up by another trade about 2 minutes after, and then pretty much just kind of establishes her little long buys here in that first 42-minute period after she gets active. So even though the tallies finished kind of low today, which isn't a bad day after her run anyway, there were still some pretty good trades here. And there are a couple of good examples of risk on, which is the way I choose to, well, it's just my favorite way of explaining risk on and risk off when you're actually interacting with Holly in real time during the day. Biggest winner, obviously, ICHR, either on risk off or risk on, 41 cents today. Not a bad little entry here. And we can see these are 15-minute candles that we're looking at here today. Nice entry line right here with the blue line. Of course, when we double click from Holly's blotter, we get all of this nice juicy information populated on the chart for us. And of course, easily identifiable is our stop loss down here, entry signal. And if there are any profit targets, we can get them to show up over here, or if we compress enough, sometimes we can get it over here too. There we go. I had to do a lot of compression, but you can get it to show up. And of course, that's going to coincide with the shaded area as well. So not a bad little entry here, you know, nice little up move, a little pullback, nice entry, and then further north for the day. So 41 cents versus had she stayed in it all day, maybe an extra 2 cents. So not really a big spread there, but it did just happen to be the biggest winner. So let's just do biggest winner, biggest loser first, and then we'll talk about risk on, risk off. So biggest loser today on risk off was CAR. And we can see here, boom, as soon as we got the buy signal here, it's almost like that acted as resistance for the stock, because boom, 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 next thing you know, we're stopped out. Actually, this was a reduced risk. If we look down here at the exit reason, risk off exit, reduce risk. So brings up a good point. What will trigger Holly to get out of a trade? Well, the first 3, vanilla, chocolate, and strawberry, are stop loss, profit target, and timed hold. Then she does have the liberty, if something isn't working, it's taking too long to work. If a loser is slowly going down and not improving, she does have the liberty to reduce that risk and close the trade early. And that's what she did on a lot of these trades today. But we can still see 46 cents is the loss that she took. Had she stayed in it, that would have only been 37 cents. So sometimes it's less favorable. But on these, we can see she lost 12 cents versus 25 staying in, 18 on her call versus 22 staying in, 12 versus 18, and then pretty much a flat here. So typically, it's just a more efficient way of managing a version of a trailing stop, but on the loss side. Okay, so let's talk about risk off and risk on a trade-by-trade basis here. So we've got an example here of a short and a long. Let's look at the long first. The strategy that presented horseshoe, the trade here, was in the symbol 0, and horseshoe up generated it. So we can look at horseshoe up here and go, okay, it came into the day, 60.2% chance of success, anything coming out of it. Of course, this one underperformed today. 1 out of 4 is 25%. So this one underperformed. That's what presented the trade here. So let's take a look at the chart. Not a bad entry here. And of course, this is about 45 minutes in, or about 30 minutes in here. Let's just go ahead and flip over to 5-minute candles. So my eyes are used to seeing. And then we can see nice little entry here. Of course, you know what I'm about to say next, Andy. You know why I like this one.
Exactly.
Because it just happened to coincide with this little range break that had developed in the first 5, 10, 15, 20, 25, 30 minutes. And then we got this nice tight little range, and then we got Holly calling it with some pretty decent statistical probability. Now, that's gold star number 1. Just so happens, this happens to be my favorite little intraday pattern. It's a nice clean break. When I'm looking for these manually, I love them because if you can catch them with volume and use right about here, the prior 15 minutes as your stop loss, you can get some really tight stops. But of course, Holly found this one, and then I just happened to notice, it's also the pattern that I like. So that's double good for me when I see this and statistical probability behind it. Then sometimes we can glance down here. This one wasn't motoring volume, but a lot of the times you can go, ooh, it's also doing massive volume at this time. In this case, I don't think it was, but the trade still works and works nicely. So we get a nice push through, and off to the races. What I also like about this one is it presented itself again for another entry. Anytime we get this sideways action after a break, we get this little flagging action, little sideways action. Buyers and sellers are relatively equal, and we got these nice little ranges right here. And then we have another run up to another breach, another nice tight range break here, and another opportunity to add to a winning position, which, believe it or not, is one of the harder things for a new trader to learn. You always hear it, cut your losers, add to your winners. Okay, a lot of times we cut our losers and something's working and we're just like, so I'm supposed to buy more of it? When? Right? Well, of course, when the pattern or the animal that we're hunting presents itself. And in this case, here's the first occurrence, here's the second occurrence. This one even sets up yet another time and gets even a little bit more push before finally rolling over. Now, what I'm also going to do here is I'm going to flip back over to 15 minutes. Because, once again, I got to give props to Steve Gomez. On the 15-minute timeline, look how nice this stock that was in play today hugs that 10-period moving average right there, which is the green line. That's a 10-period simple moving average. And when stocks are really in play, they really do hug that line. Notice it was staying above it the whole time. As soon as it breached it, what happened? Starts to go the other way. So notice I don't have my charts marked up with a ton of MACDs, RSIs, all kinds of crazy stuff. Nice and simple and clean. Pick out your favorite metrics. It's a nice, simple way to do it. Okay, so let's talk about the risk on versus risk off. Why did Holly get out of the trade? Well, timed exit. came up. That was her risk off to get out. That was her signal to get out. So she does it. It's what she's programmed to do. We can also see right here where the dark green stops. That's Holly getting out. And this was also perfect timing. It coincides with that additional add to opportunity, because when we see Holly closing it out, the next candle, it's breaking that level again. So number one, when we're seeing this, we see Holly closing out, this would have been, you know, a great time to go risk on. Or better yet, especially when you're new to this, do half and half. Get out of half with Holly on risk off. And if the chart dictates it, which this is one of the prettier ones I've seen in a while, that just happened to coincide with her getting out and this pattern coinciding here, keep the other half for risk on. And in this case, you would have been rewarded. Now, when you keep the other half for risk on, reset your stop loss to break even. So you're guaranteeing the profit on the first lot, and you're ensuring that you don't lose more than hopefully a flat or a couple of pennies on the second lot. Therefore, even if the second lot fails, you still have a net positive transaction. All right, so that's the first example of risk on in a long, and then we have one in a short today. Good old bond short, he kicked it out. He came to the party with 63.4% chance of success, had 2 trades, and hit both of them. So this little guy overperformed today. So here we have it. Of course, we just have to flip the chart around for this short sell. So here's the signal where Holly gets the play, and we get an immediate down move, right? So short at 28, we get this nice down move. Why did she close the trade? Timed exit again. Bond shorty has a timed exit. It is programmed around a 60-minute intraday hold time. Of course, we're back on 15-minute bars here. So that's why we got just a few in there. So she gets out. Now, this one is also interesting because it's a good example of a failure, okay? This RV and C right here is showing at the close right here, you'd be up 35 cents. So it's showing a higher value than risk off. But look what happened in the interim. We get out of half with Holly here. We remember what Jamie said. If we're going to stay in and risk for some risk on money, we set the second lot to a break-even stop loss. And of course, this one rolled back over and got us for a flat, or hopefully not more than a few penny loser once you get out. But we still made the money on the second half. So that's pretty much 2 good examples, one that worked and kept going, and one that rolled over and got us out of the second lot, but we still made money on the first. Andy, I heard you there for a second. Were you about to say something, or was I just?
No. Very, very good stuff, Jamie. Yeah, I want to. When it comes to risk on, I want people to understand why we created risk on. Okay, it's not something so we can try to like finagle the numbers or anything like that. Anything that we publicize, guys, and put in a book, an article or something like that, it's always going to be risk off. And the reason we do risk on, it's not so much to to say, oh wow, look how well Holly's doing today and risk on. And no, it's to give you an idea so you can learn by watching these trades, by simply looking at our P&L on the blotter down there. If you do get out of a trade, instead of having to go back, find the chart, see where it's trading at now, you can just really jump over there real quick and get an idea, had you held onto the trade, where it would be at this point. So I just kind of wanted to, because I saw a few questions about it. Yeah, I just wanted to throw that out, that it's a very good barometer for you to keep track of. And that's why we added the, and Dan likes to refer to follow the blue rabbit. That's why you see these ones as the day is progressing. We can just look down there real quickly and see the blue on last price and know that these are the ones in the money. These are the ones working. So
right, the blue ones are in the money. If you see red, they're below their stop price, right? So if I double click on ICLK here, you can see the stop is right here at the red line, and it's below its stop price. Okay, these are in the money, these are below their stop price, so it's basically telling you these are the strong stocks on the day. These are the ones that are going and going. These are the ones that are low caliber, if you see the dark red highlight there. And that is the last price column. So if you don't have that column, you just right click, you go to columns, you find it, and you push it over to the left. And Calyx, you can't change anything in the panel here for Holly stop losses, but there's nothing to stop you from going, hey, I'm taking this Holly signal, but I'm using a different stop. But there's no way for me or any user of the product to get in here and change these stops or anything. They're hard coded. All right, so I think that's about it for Holly right now. Andy, we'll see what she does tomorrow. I'm curious to see what her strategy complement is. You know, how many strategies are going to be in there tonight after the numbers are run, because you know it appears that this range hopefully is getting a little bit smaller, right?
Yeah.
And you know, the more we coil, what I've noticed in the past is like when we were back here in these areas right here, you know, it seems like, you know, the AI has a lot better of a handle on things. I mean, it takes a while for things to adjust, and she has done extremely well coming out of all this chop and pretty much all the places in between here. So anyway, I guess the action is, it feels like it's cooling down and heating up all in the same week. We'll have days like today where we get drug up on low volume, as these finishing relative volume numbers indicate. SPY only finished 70% of normal volume across the board. Q's barely, you know, 90% of normal. So it's going to be interesting to see what shows up tomorrow and what the short to long stack is. So anyway, I better kick it back over here to you.
All righty.
As soon as I can find my go-to panel. There we go.
All right. Thank you, Jamie. And let me get rid of my questions box real quick because it was taking up too much of my screen here. So, all right, guys. So last week I showed you, and let me see if I have it down here. Big cap. Yeah, big cap. So this is a big cap gappers up and down, and I showed you guys how you can use this to find potentially market direction, and not only that, to find some good potential trades throughout the day if you like trading big caps. Some people don't prefer the big caps. They can high frequency trading can have a big influence on their price action intraday. But when earnings season rolls around, it's a different story, and there can be a lot of you know, profits to be made when you're trading the big caps, especially off earnings. So let's take a look at this. If you were looking at this morning, and I remember how last week I told you this can be a great market barometer for, you know, what kind of price action we may see throughout the day. So what I'm going to do is go to a historical date here, and let's just put it on. I'm on Central Time, so I'm going to go to 8:15 a.m. This morning and take a look and see what we were looking before the market opened up. So this is all the stocks that were gapping up at least 2% or more, or gapping down 2% or more. Okay, I got kind of a double filtration in there. So you can see where it breaks right there. These are all gapping up and these are gapping down. Well, what do you see here? You see more red or you see more green? Well, I see a lot more green this morning. So I'm saying, thus the market, if you look at the spiders, this was our close yesterday. This was our kind of what we call a gap. It was gapping up in pre-market. And you know, if you're paying attention to something like this, this can maybe give you an idea what the direction may be. And you can see we had probably about 75% of the stocks that were either gapping up 2% or gapping down 2% were green and gapping up 2%. Thus, market opened up, and what do we do all day? Now, I'm not saying you can't, like, don't go tomorrow morning and do a strategy where you're going to load up on the spiders based upon which you know, color is winning the race in the morning, but it can give you an idea of maybe the direction, what the sentiment is going into the open. And as you see here on the earnings date, you know, most of these had earnings either yesterday after the close or this morning. Not always the case. There could be some news, or for whatever reason, a stock may be gapping up. So what led me to think is, all right, let's create alert, just, to find these earnings plays. Okay, so what I started thinking, what's a simple thing we can do to isolate on these earnings, when the market opens, to find out which ones are moving, highs, going to highs, and which ones are going to lows. So I said, why don't we do this today? And I haven't even done this. I'm doing it right now with you. And what we're going to do is we're going to take our multi-strategy high-low pro, and we're going to turn this into one just for earnings. So we can have one just to focus on the ones that had earnings yesterday after the close, or this morning. All right. So what I'm going to do here is take this, and I'm going to duplicate this window. And we're going to reconfigure it just to find stocks that are in play off of earnings today. Now, in case you've forgotten, or maybe you haven't even seen this, my Extreme Volume High-Low Pro, I'm going to go into Configure All, and we're going to take a look at the settings at both of these strategies. There's two strategies in here. We're going to take a look at what both of them have in common as far as the filters go. I'm looking for stocks over $5, the relative volume, looking for huge volume in both the 5-minute and 1-minute. This is just a formula to assure that anything that comes through here does report earnings, so you're not going to get any ETFs in here. And then I have a volume filter of 500,000 shares a day. So, I'm sorry, a day. All right. Now, just to tell you real quick, the ones moving going up have to be kind of breaking out of a 10-day range and close to breaking out of a 20-day range, and they have to be up over 1%. Just the opposite for the ones that are going down. They have to be down 1%, and they have to be breaking out of a 10-day low and close to a 20-day low. So what we're going to do is we're going to turn this Extreme Volume High-Low Pro into an earnings play multi-strategy window. So let's go into Configure All, and let's make the changes we're going to make on the filters. All right, the first thing I'm going to do is, I know these are going to have earnings, so I'm not real particular that they have to be doing 10 times normal 1-minute volume. Okay, more than likely they're going to be having some decent volume in it. So what I'm going to do is I'm going to lower my parameters, because I'm not looking for crazy volume, because I know there's an earnings report behind this move, so something's going to be accompanying it. So I'm going to take out the 1-minute, and I'm just going to bring down the 5-minute to 300. Okay, I'm going to leave this in there. I'm going to also, because a stock that does 300,000 shares a day on average, the day after earnings is probably going to be doing a lot more. So we're going to bring this down to 300,000. All right, and then, but we're going to have to add an earnings date filter, because otherwise we're going to be just bringing all kind of mess through here. So let's go to our search window. Let's just start typing in earnings. There's our earnings date. So we are going to click on that. We're going to add filter. And what you want to do here is just put a negative 0.25 for the minimum. And we're going to put a 0.25 for the maximum. Okay, so now we know that these stocks are either had earnings after the close yesterday, or they had earnings before the bell this morning. I don't want to see stocks that have earnings coming up. I'm only interested in those companies that had earnings recently. I don't want to see them if they had earnings yesterday morning or before that. All right, so let's just do this right here. Let's go over here and see if we need to add. I'm just going to click OK, and that's going to change everything for me. And now I'm going to go in here, and I'm just going to take a real quick look at my configuration for my up candle and see stocks moving higher, and see if there's anything I need to change on this. So position, and yeah, I want to keep that. I don't want to find stocks that are in no man's land. Even though they had earnings, I still want to see them breaking out of a range and prevent a lot of those head fakes. So that all looks pretty good, and I know now the one going down looks just the opposite. So let's go ahead and name this window. We want to rename it. And let's go to, I think it's properties, window name. Yes, multi-strategy is a little bit different. And we'll just call this earnings. Let's call it earnings, high-low pro. I need to put an S in there, don't I? There we go. All right, so we renamed our window so we don't get confused with this one over here. All right, we can just go ahead and minimize this, and let's take a look at what came through here this morning. Now, multi-strategies, when you run a history, is kind of quirky because you have a lot of data coming through on both the upside and downside, and a lot of symbols coming through. So sometimes your data may get cut off, and you won't have a chance to, an opportunity to just click on more. It's just a kind of a little glitch. It's not really a glitch. It's just kind of quirky. So let's go in here and let's see what came through here today. And there's all our data. And I'm going to go down to this morning. Hopefully we got everything this morning, and we do. We're real close to it. 8:36. So we may have missed some of the stuff in the first 5 minutes, but that's okay. All right. So guys, now we know. And this has an earnings date in it, so you can see everything's going to be -25 or +25. Now we have an idea. We know all these stocks reported earnings in which direction, because I can't tell you back in the olden days, guys, we would just have to sit here and cycle through, AT&T, CMG, and see which ones were moving. Of course, you had like maybe a high-low ticker, a basic one, but you're really, it's just all over the place because you have a lot of other stuff coming through here. So now you have a nice little multi-strategy window, so you can see these earnings coming through, and you can see this, these things hitting highs and hitting lows. Now, is it going to be presenting opportunity to you? Not every symbol that comes through here. Basically, all it's telling to you is what stocks are hitting highs and what stocks are hitting lows. But if you do, CMG this morning, it was a beautiful one, because if you're watching this and you like the long side, and all of a sudden 842 you see CMG coming through, it had earnings. It's doing huge volume for a almost a $400 stock to be doing 30 times normal 1 minute volume. Guys, this isn't just day traders. I'm telling you, these are people that are taking huge positions in CMG. So this can be very valuable, and of course this would be coming through my extreme volume high-low pro. But if you just want to hone in on earnings plays, you might have missed it over here if something else was coming through at the same time. So
yeah, I guess they're not. I guess Chipotle finally, isn't poisoning people anymore.
Yeah, yeah, yeah. I guess that's the first thing I thought of. Oh, they must not have had any reports lately of people falling over. Yeah, a lot. You can see that. Look at all this morning. If you're watching this, guys, and you're wondering, you don't have this software, and you're wondering what stocks to keep an eye on today. This is just telling you over and over and over again. Just that's the only green one coming through for the first, there's 30 minutes, and you finally get AMD. And what I love about our technology, our little resistance lines up here saying, whoa, not yet, don't buy this yet. It's got some major resistance right here. And then some things start coming through. And once again, there's another resistance right above. So this could give you, this is a really easy way, guys, to follow the stocks with earnings. Just create you a little, that was a pretty decent move there, but I would have been hesitant seeing the resistance right there. So what I'm going to do, guys, I'm going to go ahead and say I'm going to save this with you, because I want to give you those out there who do not want to play the low float stocks, or don't want to play these obscure stocks. I understand. I love to play them. But there was a time, especially during earnings season, when I would focus on some of the bigger caps, some of these stocks that just have a waterfall of volume coming into it, like CMG, because there can be some really good opportunity.
Hey Andy, real quick here, you also had a request for the, I believe it was the big cap gappers that you were showing earlier as well. So if you wouldn't in there too.
I sure will. I'm going to drop them both right now. So let me put this back on real time. All right, and the first one I'm going to drop in there, guys. What I'm going to do, if you look in your GoToWebinar interface, you're going to see a chat window. All right, and that's where I'm going to drop it, and you'll just be able to click on that link and get the cloud link. So let me do earnings, high/low. And there is the earnings one that we just created. Oh, did I not? No, I didn't click and save, did I? No, come on. All right, let's try that again. Save and share to cloud. Save and share and copy all. I never did that. And there you go. And somebody asked, yeah, we've been getting a lot of people ask for this in our email as well. All right, so once again, oh, and the beauty thing, I had a change from the open. I was doing a one-on-one session this morning, guys, and what you want to do with something like this is great for before the bell opens up to see which stocks are strong and see which are not. But when after the market opens up, you probably want to put this, well, we're going to put it on live always, okay, because you want to see it in pre-market. But once the market opens up, you know, you might want to, you don't might, if you're going to have this open during live hours, you want to do something like change from the open, because this is where you can see stocks that, you know, may have gapped down and had a beautiful, you know, move, you know, retrace that move. CMG, of course, was just a beautiful move all day long. That was up there. But anyway, because what happens is if you get stuck on gap, this thing is going to be static throughout the day, and you can kind of look over here and see which ones are headed. But if you want to get the ones that are moving, you know, from the open, just put your change, and then every 30 seconds, it's going to refresh you and show us the largest move from the open on top. So let me put this back on the gap, and I'm going to share this one. Copy all and put it in the chat, and we'll call it Big Cap Gappers. All right, guys, I'm dropping that one in there right now, and you can get that one. And that's about all, guys. I'm not going to do, like I said, I got my, no, I don't even know what happened to my questions panel. Yeah, there it is. You can pop it back out. All right.
Andy, can you hear me?
Mm-hmm.
Okay, do me a favor. The window that you clicked off CMG, was that on the high-low pro?
The window that I clicked on CMG.
Well,
yes.
CMG, I see it in the top list, but it also came through. Okay, go ahead and double click there. Okay, you did. And there's a red line up there, and I think that's what David was asking what the red line was. And our system automatically puts that up there as the next level of resistance, assuming new high is used as the alert.
Correct.
Yep.
Correct. And from what I hear, we are going to be adding that resistance line in the future, so you don't just have to click on a new high alert. It'll be when you click on a top list or any other strategy. So yeah, very powerful, David. Take a look at that, and because boy, I tell you, it'll keep you. Earlier I showed it was down here around 396. Well, it got through that level of resistance, and after that, you can see now this is the next level. It never could, you know, penetrate that level. So and what's great about it is this will go back and find these level of resistance in the charts, even going back, you know, several months or like 18 months. So even if you're only looking at maybe 6 months worth of data and you don't see the level on the chart, don't worry. Our technology will draw it for you. All right. You're welcome, David. And well, great. We had you know, a good. That's all that I have, you know, on the agenda today. Let's see. How do pre-market and evening scan alert works? Alerts. It's kind of quirky. Amanda, if you want to play around with those, because the reason so is we have some alerts that work in pre-market and some filters that work in pre-market and some that don't. And it makes sense. If you're looking at something like relative volume, you know, relative volume just looks at live market data. It's not looking at pre-market and post-market, because that would really skew the relative volume for live market. New high does not work for pre-market and post-market. We actually have alerts called pre-market high and post-market high. But if you really want to, not have to figure it out on your own, if you'll send an email requesting the alerts that work in filters that work in pre-market and post-market, just send an email to info@trade-ideas.com, and we'll provide you with a little Word doc that has the alerts and filters that work in pre-market. Yeah. Because some volume, a lot of your volume filters volume in the 5-minute. Obviously, we don't want to track pre-market 5-minute volume. That would really throw off our live market numbers. So a lot of it's just common sense, but just send us an email. All right. Well, that about wraps it up, guys, today. Yeah, just remember, during earnings season, boy, there's a lot of opportunity out there, and by coming with a game